I've covered a lot of EV plays on my channel in the past. In fact, I love the EV sector, and just like many of you, I'm long on EV plays. But I haven't done very many videos on EV charging plays, and quite frankly, I believe that it's time to do one right now. So, in this video, I'm going to be telling you all about ChargePoint Energy and why I believe that it is extremely undervalued at the moment. And we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If this is your first time here and you want to learn how to grow your wealth through investing and trading stocks in the market, make sure you start right now by subscribing and tapping that bell so you never miss a thing. I'll see you in the video. Let's go. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to another video. Today, we're talking about ChargePoint. And we're going to get right into this video because I don't want to waste any time. So, ChargePoint Energy is an EV charging startup that is set to go public through a reverse merger with Switchback Energy Acquisition Corporation, which trades under the ticker symbol SBE. Now, many of you probably already know that's nothing more than a SPAC, a special purpose acquisition company. Now, in my opinion, this is one of the best, if not the best, EV charging plays that's out there right now. For one, I believe that this company is undervalued, and I also want to point out that the company expects massive revenue growth in the near term and shouldn't need any more funding before it reaches its EBITDA profitability. And that's earnings before interest, taxes, depreciation, and amortization. The company is a leader in electric vehicle charging networks in both North America and Europe, but, and I want to make this clear, it is not expected to be profitable until 2025. This shouldn't necessarily worry you because most of the plays that we've been covering are actually not profitable. And that's because these are all speculative plays. And when you're playing stocks that are speculative, that's when you've got high risk and also extremely high reward. And that's kind of the trade-off between the two. Some people, I guess, don't realize that, so I did want to make that clear. Especially after that one guy's wife just left that series of comments on my last video calling me an idiot and a moron and accusing me of recommending bad stocks to her husband.
You're an idiot and a moron. I never want you giving advice to my husband again, especially on investing advice, idiot.
Yeah, so, I want to avoid that if I can from now on. Okay, maybe I just made that up. Anyhow, it is important. Pay attention to it. And now we're going to move right along. So, as we know from covering a few EV plays already, the total addressable market is massive. Currently, the EV sales data that we have for the United States and Europe, and this is data from 2019, it shows that only 2.6% of all of the vehicles sold were electric. But that number is projected to be 9.9% by the year 2025, which is right around the corner if you think about it. And then a massive 29.2% in 2030. That's a huge difference. These are all speculative investments with a lot of room to grow, and that's what makes them great. So in other words, these should be considered as high risk and high reward investments. So when you're purchasing into these stocks or purchasing shares of these stocks, make sure you consider your risk before putting any money into them. That's very important. And also, according to Bloomberg, investments for EV charging stations are projected to be at about $190 billion by 2030. So ChargePoint has a winning business model, or so they say. And they say this because as EV penetration grows, they plan on growing. And they say that monetization is not tied to energy or utilization because they're vertically integrated and have a complete portfolio of networked solutions. Their platform technologies provide major advantages in fleet applications. Now, remember earlier when we discussed the numbers behind the growth of EV sales, when we said that currently the US is at like 2.6%, and by 2025 we're expected to grow to 9.9%, I believe. And then by 2030, yep, it was 2030, we're expected, or this isn't just the US, I messed up, I made a mistake. It's the US and Europe. So by 2030, we're talking about a 29.9% sales growth. So this is huge. Now I'm going to have to show you why. Now take a look at your screen and you'll see this bar chart that shows you what ChargePoint growth directly proportional to EV penetration actually means, you know, when you're looking at it. They're talking about $1 billion worth of revenue at 3% EV penetration. So the additional tailwinds that they're talking about here, they're going to be fossil fuel bans, transit electrification dates, incentive programs, all major auto OEM brands committed to electric, and future EV cost reductions with advances in battery technology. So I'm going to go over all of that. There are going to be fossil fuel bans. It's already kind of started. We see it happening in California and I believe 13 or 14 other states. It's going to continue happening. I mean, it all starts with California and then trickles down to every other state over time. And we kind of have a timeline for all of that to actually, you know, take place. I believe that'll be like the year 2040. And I just want to clarify, when I say 2040, I mean this transition will already have taken place by 2040. I don't mean that it's starting in 2040. You know, as I said before, it's already started, and little by little new legislation will keep getting passed based on, they're kind of playing it by ear, okay? Because this is their first time doing it. They don't know exactly what to expect or what to put into this legislation. So right now, they're trying to get it all figured out, and they're passing legislation based on what they anticipate will happen and how they anticipate that this will all work. But as this is, you know, happening live as we speak, and their first time to be dealing with it, you know, there's no way in the world that they're going to, you know, cover every scenario. You know, they're not going to be able to think about or think of every scenario that could possibly take place. So legislation is going to be formed, you know, on an as needed basis as things transpire. But, you know, rest assured, this will all take place by the year 2040. Now, to comment on other vehicle manufacturers going electric, that's already going on too. I mean, they're not going to wait till the legislation passes to, you know, restrict them from selling their vehicles, from selling like their ICE vehicles and stuff like that. They're already, you know, making the switch to electric or hybrid vehicles, whatever the case may be for whatever company. But I've seen it, you know, firsthand. Well, I can't say I've seen it firsthand. I've done the research and seen it in my research that, you know, they're taking steps towards taking a greener approach. Let's just leave it at that. I don't know what else to call it, but yeah. So all these companies, they're not going to wait. They're going to start now. They've already started. So we may see a lot of this happen sooner than, you know, 2040, but that's just kind of like the timeline we've got, or the time frame we got, based on the legislation that was passed in California. And I'm expecting that to trickle down, as I said, to these other states, which is why I'm going with that date. Now, I believe that what we just talked about covers most of these. So they're saying incentives. I know they mentioned incentives and advances in battery technology. So you see that all these new, basically, SPACs are coming out, bringing companies public that, you know, it's like everybody and their mama are working on, you know, new battery technology. So we know all that's coming. We know we're going to see some advances in battery technology. Heck, we've even got Tesla that's working on batteries and, companies like Lordstown Motors that are saying they're working on their own batteries. I believe Tesla may be even working on their own batteries, if I remember. Not Tesla, NIO, if I remember correctly. Then GM even, all of these companies, all of these EV companies are basically trying to get their hands on their own batteries. And as far as incentives go, we're already seeing that happening. We've got incentives for companies going green, which makes a lot of sense because, the government does need to give incentives. We do need to take care of our environment, and it costs these companies a lot of money to come up with these solutions, or to, for example, one example would be electrifying a fleet. It costs these companies money to replace these fleets, so they do need to be incentivized. And we're seeing the incentives already, especially if you've been looking into other EV stocks, or if you've been following this channel. You know that people that buy vehicles from, or companies that buy vehicles from Workhorse, are getting incentives. And, that's going on at least in California that I know of. I believe I heard something about New York recently doing that as well. And, the reason behind that is because Workhorse's vehicles are now certified, and they're certified to be zero emissions and all electric, plus other certifications that they have. So each company or each vehicle manufacturer has to meet certain criteria in order to be eligible for these incentives, or for people that are buying, the companies that are buying the vehicles from the manufacturer, to receive an incentive, which ultimately will help that company sell more vehicles because its customers are getting, big discounts there. As you guys can see, they sell hardware, recurring software and services, and they offer these through commercial products, fleet products, and also residential products. Now, this makes a whole lot of sense to me. Really, all three of these are self-explanatory, but I just wanted to comment on the residential portion of it. I think it's a great idea because, if I have to go somewhere to some other location to charge my vehicle, whether that's at work or wherever, I'm going to be pretty ticked off. That's kind of like not being able to charge your cell phone at home. So I'm glad that they're, providing those products which allow the customer to charge, any vehicle, or let me put it this way, their chargers are compatible with any vehicle. I believe that's all I have for you guys today, but I do want to do a very brief review and then touch up on implied enterprise value very quickly. ChargePoint enables existing public and private companies and organizations to convert parking spaces into charging points for EVs. And with that being said, they make money off of their software and equipment. And Switchback Energy, the SPAC that will do a reverse merger with ChargePoint, said that the deal is worth $2.4 billion in implied enterprise value. And this is after deducting $648 million in net cash from the implied equity value that ChargePoint will have at the close of the deal. But keep in mind that the enterprise value calculation, which is market equity value less any net cash, was based on a $10 price assumption for SBE stock. And we can't use that valuation anymore as the price has gone up. So in other words, the equity portion of the deal is now 54%. But with $648 million in net cash, the implied enterprise value is $2.4 billion. So as SBE stock approached $15, the implied equity value is closer to $4.6 billion. And therefore, the implied enterprise value is approaching $4 billion.
Congratulations, ladies and gentlemen, you've made it to the end of the video. If you found this video helpful, I ask that you help this channel out by smashing that like button, as it motivates me to keep making videos just like this one every single day. If you're not a subscriber, you should consider subscribing, as I publish valuable content like this daily. You can do so from your screen right now, and if you want to check out more of my videos, you can click on the video that you'd like to see on your screen right now. Thanks for watching, and I will see you guys in the next video.